Welcome to another episode of Elixir Talks, where we discuss information which simplifies real estate and enables you to achieve your goals better. In this particular episode, we will discuss what exactly is fair market value in real estate. We will also touch upon how this can be arrived at professionally. Market value is what a buyer is willing to pay for real estate, and the seller is willing to accept in exchange of the title of the property without any undue pressure. The last point is that there should be no stress or precondition with either of seller or buyer, and that is the market value of a property. The market value is always as of date, and it keeps changing with the market. It is seldom constant. However, saturated real estate markets might continue at the same level for a continued period or duration. Therefore, market value might give an impression that it is constant for a given period, though really it is not. Market value is determined by carefully examining the subject and then finding similar comparable sales which have been sold in the last 60 to 90 days with similar property type, style, age in the same community. If the market is dynamic and changing rapidly, it might call for selecting an even shorter duration and recent sales to arrive at market value accurately. After finding the comparable sales, the next step is to perform positive and negative adjustments for additional or missing features in the comparable in relation to the subject. The final aggregation of such adjustments for the comparables will provide us with fair market value. Another essential point to remember is that the more comparable sales we can find, the more accurate and reliable fair market value would become. Let us try to understand this with an example. Let us regard we want to arrive at a fair market value for a two-story, three-bedroom detached home in 1500 to 2000 square foot bracket above grade of space. And we are able to find 6 properties which are two-story, three-bedroom detached homes of similar square footage and age in the immediate neighborhood of the subject. All of these 6 properties have sold in last 2 months. The median sold price of these properties is coming at 780,000. And there is one 3-bedroom detached which has sold in previous 2 months in the same area at 850,000. That doesn't mean that fair value of the subject becomes around 850,000. The reason is that majority of the houses are sold sub 800k, and that we have to ensure as a buyer. Now let us try to understand why is fair market value so important. As a buyer, determining the fair market value professionally helps us retain our immunity in the market where we do not overpay for a property. And when the market saturates, we do not come into stress. On the other hand, if as a purchaser we get emotional about the purchase and overpay for a property, it will take away our immunity. If suppose market turns other way, we might be forced to execute a distress sale. To avoid this situation at the first place, your realtor has a critical role in evaluating the as of date market value and ensuring that your purchase is within reason and you are secure. As a seller, it is equally critical to arrive at the fair market value correctly for the property we are trying to dispose of and pitch it fairly to the market. The reason is that when we list a property on a multiple listing service, we should make every effort to present it well, market it comprehensively, and price it fairly. These 3 things will ensure that buyer prospects exposed to the property are seeing value in the property. The ideal situation in real estate transaction is where both buyer and seller are happy and willing to make the purchase and sale. Both see value in what they are giving and what they are receiving in return. This will be possible when the seller evaluates the property without getting emotional. If we don't list it rationally, the buyer prospects don't see enough value in the property, and the listing becomes stale with inactivity. At this time, the new buyers coming to the market do not reciprocate positively for the property. Instead, the buyers feel there might be an issue with the layout or location of the property due to which it is standing on the market for such a long time. Eventually, what ends up happening is that the property sells for even less than the fair value, and we lose money on the table as a seller, the money which the property deserved. Hope you understood the importance of fair market value in both buying and selling situations. Thanks for watching, and if you like this episode, do subscribe for more such content and share with your friends who might be looking to purchase or sell real estate and may find this helpful. Stay positive, and I will see you soon.